Welcome to the session, what linkage between formal and informal finance can offer and what it cannot yet deliver. My name is Hannah Laufer. I am the MREA lead of the Savings at the Frontier program, and I will be leading this discussion. I'm very happy, Raksha, that you have time to join me for this conversation. Please, can you introduce yourself and maybe your work for the Savings Learning Lab?
Yeah, thanks, Hannah. My name is Raksha Vasudevan. I am a financial inclusion consultant with ITAD and the Savings Learning Lab. In terms of this project, I was looking at the data that we're going to be talking about in detail in this session and tried to provide a second perspective or opinion on how the linkages between group accounts and individual accounts were functioning.
Great, thank you. I guess this session is an opportunity for us to discuss whether and how formal financial services providers can add value to savings groups and informal savings mechanisms such as susu mechanisms. And we can, I guess, explore a little bit more about how savings groups and individual savers engage with the formal financial services providers and how they experience the value offers and the products of our partner FSPs. The conversation is primarily based on the longitudinal impact assessment that we are conducting with Bath Social Development Research. We're doing that in Ghana, Tanzania, and Zambia, in the countries where we also work. And we do that using the QuiP method, which is a qualitative impact protocol, so a qualitative evaluation approach. So in the next 30 minutes or so, I hope we get around to discussing the drivers of linkage, successful linkage, and maybe challenge some of the existing perceptions of what it means to link a formal financial services provider to a savings group. A bit of context before we start. If this is the first time that you hear about the Savings at the Frontier program, it is a 6.5-year partnership that exists between the MasterCard Foundation and Oxford Policy Management. It supports 10 financial services providers in delivering affordable financial services to lower income market segments. In the context of the program, that means smallholder communities, it means urban traders, it means participants of the informal economy, and it does so by working with informal savings mechanisms. And when we say informal savings mechanisms, we mean all the different collective mechanisms of savings. So it can be ROSCAs, ASCAs, VSLAs, and your usual savings groups. I think one last bit of information, it's important to highlight that the Savings at the Frontier program works with a lot of different financial services providers. So we work with fintechs, aggregators, larger commercial banks, challenger banks, and MFI. So the business models, the delivery models, and the value offers, the products are quite different from FSP to FSP. So I think I'll provide 2 examples here so that you can pause the video and look at the different value offers if you are interested. So our assumption, I guess, in the beginning was that once our partner FSPs have established a relationship with the savers, that they would keep expanding and deepening their value propositions, which they are doing now in the final year of program implementation. So we are constantly learning new things. And lastly, I want to say that the findings that we're discussing in this session are not only generated based on the QuiP material, but they were also triangulated with the monitoring data. We looked at other research studies that we've conducted previously in Tanzania and Zambia, and some of the lessons also come from implementation observations. Okay, I will quickly invite Raksha to talk about the Savings Learning Lab and her work in the past weeks with the QuiP data.
Thanks, Hannah. As Hannah briefly alluded to earlier, the Savings Learning Lab works closely with the MasterCard Foundation through supporting learning as part of the adaptive management mandate. And specifically, it supports learning among the foundation's savings sector portfolio programs and also the wider sector through the generation, synthesis, curation, and dissemination of knowledge on savings-focused financial inclusion. So this involves a wide variety of research and methodologies of research. And what I was specifically doing for this project was looking at the 6 rounds of QuiP data collection that had already been carried out, and conducted an analysis of how users, informal savings mechanism or savings group users, are thinking about the relationship between group accounts and individual accounts, how they see those 2 accounts as being linked or not, how they see those 2 services working together or not, and also how the FSPs have seen those play out in reality. And this was all in response to some of the QuiP data finding that the way that users are actually responding to these 2 different types of accounts is not exactly in line with Savings at the Frontiers theory of change. It's a little bit different, which I think we'll get into later. And so the analysis I carried out was really to look at, okay, is that true? Is it actually different than what Savings at the Frontiers theory of change suggested? And if so, what are some possible reasons that are coming up in the research as to why this might be the case?
So what is QuiP? QuiP is a qualitative approach. It's an innovative method to conduct qualitative impact analysis. It's an opportunity to test preconception, for example, the original theory of change built at the design stage of a project, and an opportunity to refine it later on after the first stage of implementation of the project. It's an opportunity and a way to elucidate the black box of the causal links that are expected. Why do they happen? How? For whom? And it allows to do that by hearing the voice of the beneficiaries. The QuiP studies can be tailored to the objective of the study conducted, can be adapted to the project being evaluated. Some key principles usually apply, though. For example, regarding the research team, the lead researchers knows the project or the topic of the study, but not the field research team conducting the interviews. And the respondents don't know either at the time of the interview what project is being evaluated. It's called double blindfolding. The blindfold is not meant to be permanent. It's meant to be lifted at the end of the process through a restitution workshop. And it's not mandatory, and there are several degrees of blindfolding that can be discussed at the design stage of the QuiP study. The questionnaire is designed in a way that it's focused on key topics. For example, in the case of this, of the Savings at the Frontier initiative, it was around the topics of savings, borrowing, farming, community life. And respondents are asked about changes they have experienced in these areas over a defined recall period. So, for example, the length of the program. And by asking for changes and why it happened, the questionnaire aims to elucidate the causal link. So here is an example of a map that was obtained with the data from the QuiP study conducted in Zambia with Madison Finance. And here the label saving with MFIN Bank and having on a bank account is the center of the map, and you can see on the left side all the drivers that led to this change, saving with MFIN bank account, and on the right you can see what saving with an MFIN bank account led to, all the changes that it led to.
it had a lot to do, I think, with our own understanding of the concept of linkage, which now evolved over time. But going back to the initial concept notes that our FSP partners submitted, and the discussions that we also had as an internal team, we were thinking a lot about the group account and the features of the account and how to design a group account or savings offer for informal savings mechanisms. And we assumed that that was the key decision driver to engage with the FSP. So the product would lead the value proposition. But when we asked the groups about changes in their financial lives and their habits, the groups, they would not say, oh, we have a new bank account now. They would say, someone from the bank came to talk to us, to train us, to listen to us, to visit us.
The relationship.
Yeah, and I think that was a big aha moment for us as well as for the FSP partners. So I guess what we saw was that the individual accounts that were opened, the individual saver accounts, that was attributable to the linkage efforts of the partner FSPs, and a lot of them, of course, also opened a group account. And we're not saying that the group accounts are not valued, but we can see that the individual account activity for a lot of our FSP partners is higher than the activity that we see in the group accounts, for example, and that the relationship comes from this group engagement, but that each of the individual savers develop their own ways of using the accounts, and that has nothing to do, or very little at the moment, very little to do with the group accounts. So groups cared about, I guess, the visit of the FSPs and the relationship, the time that was spent with them, and they cared about being able to test the individual account and open an individual account where the value proposition made sense to them, of course. But I don't think they saw the ISM account or the group account as a major change event.
Add a more concrete sense of what savings group members actually said. I'll just add to what to the findings that Hannah pointed out by offering a couple of quotes from the QuiP research that illustrate how people mentally distinguish between savings in the savings group and in their individual accounts. And as Hannah said, they tend to be quite separate sort of buckets or containers. So for example, one person said, now I save in two places, one, a tin can at home, and two, the savings group, because we made an agreement of saving together in the group. I evaluated my future and I thought it worth to save for covering immediate problems. So I guess our interpretation of that is that the individual savings, whether that's in an account or in a tin can at home, could be for more sort of immediate or short-term purposes than savings in the group accounts, which obviously have more of a schedule to when people can withdraw those savings. And of course, this finding varies too between, it's very different to save in a tin can, which has very low barriers to access, and savings in an individual bank account, which we'll talk about later. But that was maybe one distinction that we saw people making. Another person said, I save with the savings group every month according to our group schedule. I save in my personal account according to when I have extra money from the savings group. This year I have saved to my account twice. So we also found that interesting because, so that suggests that maybe savings in the savings group is sort of a first priority, and something that people really dedicated a lot of effort and I guess resources into making sure they met that commitment. And then perhaps the individual account served as sort of a container for leftover savings. So yeah, those are kind of, yeah, go ahead.
Yeah, no, I think that illustrates quite nicely also how we were wrong about that the individual account and the group account should speak to each other. that it was important, or that there would be a lot of value placed in this link between group and member account, and that individual savers would want to then use digital and mobile channels to make deposits to the group and to maybe get their share outs in digital versions into the wallet or into the account, which I think is not the case now. We expect that it might, at a later stage, when people get more comfortable maybe with the FSP or with the digital products, that will come later. But we were trying to get it right so hard. I guess in the beginning, we were really focused on making group to member, member to group transactions free and efficient and convenient, and maybe even offer digital solutions to bookkeeping for the savings group. So to say that maybe, we'll save you time, you don't have to do the whole cash depositing structure, you don't have to do these processes, but you can just open the app and see what's in the books.
Yeah,
I think we were probably quite wrong about that, because so far, I guess none of our FSP partners have found a solution to making that work, and the transactions that we see between individual and group accounts are really limited so far. So yeah, I think there must be something going on, especially with the savings group savings, that we as formal financial services provider, we cannot replace and you cannot touch. It seems to be quite unique.
Yeah, I think another thing that came up in the research or the transcripts was that it's hard to replace, and perhaps there's no desire among savings group members to sort of replace the transparency and the trust that comes from seeing other people make their contributions in cash.
Yeah.
Even if there is a quote unquote simpler way to do it. And so I guess to give an example of how complicated this double bookkeeping can be, even for the few groups that have accounted it. One group said, now we use both cash at group meetings, or we use deposits in the group bank account, and we submit the receipt to the group during meetings. In returning the loan, we either bring cash to the cashier during the weekly meeting, or if you deposit in the bank, you bring the deposit slip to the cashier. So I think there is, in digitizing all of that, even if it's possible, it's maybe not desirable at this stage, because there is perhaps something about seeing that slip of paper or that wad of cash that groups really value and is like core to sort of the group cohesion.
Yeah, and I mean, this is a nice use case of sort of like a hybrid solution, right? But it's not what we had in mind when we thought we'll make it more convenient. And maybe this is a good point for people watching this video as well. If you know of solutions that work for savings groups, please get in touch and let's talk about it. Because we're still working on the solutions, and maybe the next rounds of data collection will show that some of these solutions, might get adopted and people will use them. But so far, we haven't cracked the code.
Another, I assume this was sort of expected, but something that did come up quite often in the research was in the value of interest payouts for users of both group and individual accounts, as well as the potential access to loans that usage of these accounts might offer. So low interest rates were cited as a deterrent to both opening and using both types of accounts, individual and savings group accounts. And so that's something that I imagine your FSP partners are grappling with, because I'm sure this isn't a new obstacle that was unexpected, but it is something that still remains important for users.
Yeah, we did find that in the Zambia research study that we conducted with FSDZ as well, where groups told us that the money had to work for them. It needs to work. It can't just sit and be idle. It has to work, and it does that in the savings groups. And so there, I guess what that means is there are features that you could add to a group account that would make it more attractive, or that would make it more of a value driver. But what we also wanted to talk about was the role of the ISMs in then facilitating this relationship between formal and informal, or between someone who's previously been underserved and now is becoming part of the formal finance world. So I guess what we see here is that savings groups and ISMs in general can sometimes function as a form of a sandbox, and that they can provide a safe learning environment for people for customers to test and engage with the new services. And if I'm a little bit more risk averse, or if I don't have the margin of error of maybe losing a small deposit to someone, then I can observe other ISM members in testing out the products, and maybe they want to send something on the digital channel, and I'll ask them, did it arrive?
Yeah.
So that it's almost providing the safe learning space where I can develop my own use case and my own relationship with a formal financial services provider, and I don't have to carry all of the risk.
The thing that we briefly mentioned earlier that I wanted to come back to was the mental accounts of savings group users' contributions, and how they vary between sort of different types of accounts or mechanisms. And as I mentioned earlier, one of the value drivers of I guess both actually group savings, but also individual bank accounts is in the hurdles that they pose to actually accessing those savings. So that it's much harder to access the savings that you've already contributed to a group, or that you have deposited in a bank account, especially if you are not yet using sort of digital channels to interact with your bank account. It's much harder to access those types of savings than what you might have in a tin can at home, for example. Whereas other types of quote unquote individual savings are actually designed to facilitate spending and easy access. So the tin can is obviously one, but then a lot of people also mentioned savings in a mobile wallet or in mobile money, which and perhaps one of the reasons they preferred that is because it was easier to access, but other people also said they didn't see that as a very sort of robust form of savings, precisely because it was so easy to access, and because mobile money accounts are designed to facilitate ease of payments and interoperability and all that and all of that. So I think this provides some initial evidence that the individual accounts don't change the appetite for savings groups or other informal savings mechanisms. And it doesn't alter the behavior that users display in using them. They really are quite sort of different mechanisms in users' heads.
Which is good to know. I mean, that was part of a lot of the discussions within the Savings at the Frontier team in the beginning. Are we replacing parts of the informal savings mechanisms? But I think we're beginning to see that we are not, and that by offering additional complementary services and by offering these avenues into formal finance that are not, you're on your own, but that are sort of collective experiences, it's almost like, yeah, easing your way into it and finding your voice before you need it, I guess.
Yeah.
What's an interesting consideration with our FSP partners as a result of this research was the need for them to understand collective structures a little bit better, and for them to start saying, how do groups behave, and how does the technology, or how do the accounts also diffuse in communities? And I think capitalizing on the opportunity of having these peer networks and the peer learning mechanisms where you don't have to engage with every customer one-on-one, but where customers help each other in navigating this and testing and evaluating your product, that is an opportunity. It was exciting to see our FSP partners understand that, and to sort of think about how can we purposefully and strategically maybe use that and start engaging with groups rather than individuals. That was quite an interesting consequence of the research, I guess.
Mm-hmm. Yeah, and I think actually very similar to that, one other consideration is how might FSPs sort of shift their unit of analysis exactly from individuals to collective communities, not just for group products, but also for product services aimed at individuals. Because as you pointed out earlier, Hannah, groups can function as a really wonderful sandbox or safe space for people to test out new products and learn from them. And so, one question that we might have for FSPs is, how could they learn more about group and community dynamics? One popular way is, many FSPs also already identify lead farmers or local leaders. What are some other strategies to engage with customers as groups, even for individual products, knowing that the individuals and groups obviously aren't separate, and technology diffusion, especially in rural communities, are significantly shaped, as you said, by peer networks and peer-to-peer learning and exchanges.
The QuiP studies always consider the group as a unit of analysis. For example, interviews conducted in the field are individual interviews, but also focus group discussions. And there are also key informant interviews conducted with community leaders or lead farmers, lead groups, etc. So the questionnaire always includes a section on group dynamics, even for individual interviews, and whether it's a saving group or the community at large, those questions are part of a QuiP study. Some examples of questions are presented here, and you can see that the group is a unit of analysis, and we focus also on peer learning and the effects the network the person is a part of has on the decisions made and the changes observed. So all these points are covered in the formulation of the question, and an emphasis can be put on that at the design stage of the QuiP study.
So yeah, we're looking forward to learning more about our customers in the different countries and doing more rounds of data collection. And I hope the Savings Learning Lab will be by our side to share them. So we are in the final year of implementation now, but there will be different reports coming out of our research efforts. So I think the next publication will be yours, Raksha, where you help us sort of make sense of the findings, and yeah, I hope you all stay tuned and you will look out for the publication when it comes out. Thank you very much.
Thank you.